Now we're recording. For those of you who may not be familiar with Startup Junkie, we're a mission-driven organization based here in Northwest Arkansas. Our office is located on the Fayetteville Square, and that mission is to empower innovators and entrepreneurs. And we do that largely through two facets. One of those is through one-on-one no-cost consulting with entrepreneurs, whether you have an idea written on the back of a napkin or $25 million in revenue. We're here to help you any way that we can. We have a team of consultants, and our goal is to help you, start your business, grow your business, and succeed. And the other facet is through events. We have about 200 events a year that we host, co-host, facilitate, just like this one here today. We appreciate y'all for joining us today for today's webinar. Our special guest and presenter today is Jeff Simmons. He's a former state of Arkansas tax auditor with almost 30 years of state and local tax experience. He's a graduate of Arkansas State University, majored in accounting, minored in computer information systems. He went to work for the Department of Finance and Administration Office of Field Audit and was appointed by the governor's quality management team for field audit, where his suggestions were implemented into law. Management and field audit selected Jeff to train with the IRS and then conduct workshops for other auditors in the latest approaches or undertakings that would be put into practice. And so we are very appreciative to have him here to lead our presentation today. So without further ado, I will turn it over to you, Jeff.
All right, I appreciate it. Hey guys, I appreciate you taking the time out of your busy day, and especially during your lunch. It's not a real sexy subject we're covering today, which is sales and use tax. It's actually a little bit dry, but it's one that can ruin your business. And so I do want to say this: if any of you guys are looking probably for some income tax information, payroll tax information, this is probably not the webinar for you. We're doing strictly sales and use tax. As far as income tax goes, I am a very knowledgeable sales and use tax guy. You got your own accountants who can answer those income tax questions, though that is not me. As Caleb said, I was a tax auditor for 10 years, and a lot of y'all it's really not all that appreciated all that much, but here's what's happening. Colleges are turning out graduates with accounting degrees like I did at zero, not a one sales and use tax class in college. That's not college's fault. 99.95% of the folks come out, go into public accounting, so they're doing it for the masses. The only way you're going to get any sales tax experience is to go to work for the state of Arkansas, which is what I did. Straight out of college, went in and started working for the Sales and Use Tax Division, audited major corporations, traveled extensively from Florida to New York, auditing the major corporations. Now, once I saw that there was a need for experienced sales and use tax folks, that's when I stepped out and I formed a group called Arkansas Tax Associates. Went out with two other auditors. I was president of that corporation for 12 years. We created quite the company, but I wanted to get into more of the educational side, so that's why I'm doing what I'm doing. Like I said, I was the president for 12 years. I formed SALT Group. SALT stands for State and Local Tax. That is an acronym in our business, and so that's what we do. We focus strictly on sales and use tax issues. Like I said, I want to get into the educational side, so I do stuff like this. I've done this talks across the state for the Arkansas Small Business Development and Training Centers. I've done not webinars, but I've done live presentations for the State Chamber of Commerce at their biennial conferences, tax conferences. And we'll be speaking at the Arkansas Waterworks Conference. That's for sales and use tax for waterwork divisions. Currently, just this past year, we refunded $1.25 million in overpay tax for our clients, and we assisted other folks. The reason I do what I do in these webinars is because I'd rather you get it right on the front end than come crying to me in 3 to 5, 7 years when you get audited and there's nothing we can do for you. We get you a good firm foundation. That's what we're going to do. So we're fixing to get started, and we're going to do a couple of definitions first. Everything with these sales tax laws is based on definitions. If it necessarily is. Let me pull it up here. Sorry about that, guys. The definition of the sale is any transaction resulting in the transfer of either the title or possession for valuable consideration. Goes on and on and on. The local tax rules apply to every sale that goes on. Arkansas law is set up where in two parts. We have tangible personal property and we have services. And under the state law, tangible personal property is taxable unless it's specifically exempted in the law. Services are exempt unless they're specifically taxed. Two different things. That's why today we're kind of focusing on retailers, because I can't get off into the contractor or the services side because it's kind of two different laws. As if taxes on the tangible personal property side, it's always taxable. You better charge tax on it. Remember that you're a conduit for the tax. So if you are not collecting it and sending it into the state and it's a taxable transaction, you're going to be the one held liable. Now, Arkansas, and I'll use these terms interchangeably, gross receipts and sales tax. Arkansas is a gross receipts state. I know that doesn't mean much, but here we go back with the definitions again. If you're a gross receipt state, that means anything that goes on, if that invoice is taxable, anything with that invoice is taxable. So if you ship it by FedEx and you charge the customer freight, you better charge the freight. If you have insurance on that and you ship it and you bill the customer on that invoice, it better be taxed. And gross receipts, everything is taxable. In sales tax, straight sales tax states, just the item itself is taxable. So you've got to know that since we're in Arkansas, we're a gross receipt state. If you put freight, billing, shipping, handling, insurance, packaging, whatever you want to call it on there, that gets taxed as well. Now on the rule book we have with the state of Arkansas was last updated in 2008. I am not misspeaking, that is the way it is, 2008. The state sees fit about every decade and a half to update the rule book. Since 2008, we've had 8 legislative sessions, a couple special sessions in there. All the laws that passed during that time are not in the rule book. So if you don't know your laws and stay on top of them, you're going to be doing items that you're selling stuff that may be taxable that you don't know about because it's not in the rule book. A great example of that is back in 1993 was the last time that it was updated before the 2008. All the services became taxable: lawn mowing, janitorial, armored car, fur storage. The reason they pick these services is because they don't have a great lobby to kind of stop it, but they went after all these folks. So if you looked in the rule book in 1993, those services were not listed as taxable, but were still held because we watched every detective show, you know that ignorance of the law is no excuse. So what they've done is they've made it to where you've got to stay on top of it. So like I said, we've had 8 legislative sessions, 2 special sessions since 2008, and none of that's gone into the rule book. They've been promising a new one for about 2.5 years now. We've yet to see it, so hopefully it'll be coming out pretty soon. So like I said, that's the definition of a gross receipt state: is everything is taxable, especially if you're selling tangible personal property, unless a specific exemption applies. Now there's also the companion to gross receipts tax, which is compensating use tax. That is anything that you buy, store, use, consume, or distribute in your business that you're not actually reselling. Such as, say, a restaurant purchases equipment, purchases their stove from outside the state of Arkansas. They bring it in. They're not actually selling the stove. They're using it to prepare their food or the to-go orders, but that is subject to sales tax. You cannot buy that, sell for resale. It's straight taxable, and that's what consumer use tax does, because if you'd gone down to your local neighborhood appliance store, you would pay tax on it when you bought it. But because it comes across state line, then that's where the consumer use tax comes. It has to be interstate commerce for it to be use tax. This is kind of going away now because of the Wayfair versus Code decision, where they said economic nexus is enough to determine that you have to register for states. So most states now, if you do over $100,000 shipping into a state, you have to register to collect their sales tax. That's the consumer use portion. It used to be a big money maker for the state because no one knew about it. Back when Amazon was just kicking off, they were not registered. If you'll start to notice now, when you buy from Amazon, there's tax in it on most of it if it's coming straight from Amazon, because they're a marketplace facilitator. Facilitators have to charge tax, so that's kind of starting to phase out the consumer use tax portion. And it's giving quite a bit of new revenue to the state of Arkansas, which is good. That way they'll kind of quit taxing maybe some more services because revenues are going to grow. Now what we're going to do is you've put your idea together, you've opened your dress shop, your suit shop, your restaurant, whatever it is, you're selling widgets. So what we need to do is you need to figure out what is going to be exempt in your business and what is going to be taxable. If you're selling, if let's say you're a dress shop in Fayetteville, of course, all of your clothing that you're going to buy is going to be exempt. But what about the bags that go out? What about the register? Well, see, that's what we were talking about a while ago. You're not selling the register, you're not selling the bags. So you have to issue what's called an exemption certificate to your vendors. The exemption certificate protects your vendors from charging, keeps them from charging you tax, and protects them because at that point in time, they've accepted that in good faith. Now, this is very important that you be very specific in these exemption certificates. The exemption certificate has placed your permit number, what you're buying, and if you give them just a copy of your blank exemption certificate, they do not have to charge you tax on anything because you've given them a blank exemption certificate with your name signed on it, and so they assume that everything is exempt. That's the same way if you give them a copy of your permit that comes from the state of Arkansas. Permit has a big logo on it and it gives your business name. If you give them a copy of that permit, they will quit charging you tax. That's their get out of jail free card. They don't have to worry about it. That's going to be your responsibility. The state will come in and audit you, get you for good faith abuse, and assess you the tax plus penalty plus interest. So it's very important that you get these exemption certificates correct on the front end and be very specific on what you want to buy that is tax free. That way, if you're in a restaurant business and you're buying supplies and a restaurant, like your tableware is not taxable. Boxes that you put your food in to ship it out, take out, it's not taxable. But you know what? Your bags are taxable. Your napkins are taxable. But if you give someone just your straight copy of your permit or give them an exemption certificate saying everything I buy from you is exempt, you're going to be the one held responsible for that. Now, the reverse on that is, all right, now you're in business and you've got someone coming in presenting an exemption certificate to you saying that their purchases to you are exempt. Well, that's great. If they give you the copy of the permit or they give you a blank exemption certificate, just like for your vendors, now that's your get out of jail free card. You don't have to charge tax to anyone. But most vendors would rather have just a copy of the permit, and they will ask you for that as you go into business. And so you've got to be very careful because they're protecting themselves when they do that, because then they don't have to worry about charging you the tax. A properly executed exemption certificate to your vendors states what is exempt, and then that's it. So they have to decide, okay, this is exempt, this is taxable, and it all falls on them to get it correct. A blank, it falls on you. Now,
hey Jeff, sorry to interrupt you real quick. You are not sharing your screen at the moment. If you'll.
Oh, I don't know what happened here. Here we go.
Share that. There we go.
There we go. That's better, isn't it?
And if you pull up your slide deck.
Okay, let me get back over there. Let me get away from me for a second here. We've had all kinds of problems here today with electronic stuff. So.
All good. There we go.
There we go. We're back now. The Arkansas Rulebook, we were just discussing a while ago. As you can see, that with the highlighted portion down there, revised October 2008. That's 8 other legislative sessions, 2 special sessions of sales tax laws that have not been passed, that have been passed that are not in there. Now, if anyone would like a copy of this afterwards, it's the best we've got right now. I can send it to you in a PDF form. It's not a problem, and we'll get you taken care of. Here's the exemption certificate I was talking about that none of y'all got to see, and I apologize for that. This is the exemption certificate that your vendors are going to want, that you're going to want to issue to your vendors, and your customers are going to give to you. As you can see down there, it says the merchant, right in the middle, the merchandise purchase is exempt for the following reason. And that's what where you put what it is, and then right above it is the description of the merchandise to be purchased. That is when you get specific. What it is you're purchasing, and then what it's, so that lets the vendor know this stuff is exempt, everything else that I purchased from you is taxable. If you're going to exempt sales to your customers, you better have one of these on file. If you don't, you actually have it's called the 90-day rule, and you have the ability to go back and get an exemption certificate 90 days after the fact. If they don't give it back to you, well, then you're going to be held liable. As I said earlier, you're just a conduit for the tax. You're collecting the tax, you're remitting it to the state. It doesn't do you any good to take any unnecessary chances in exempting stuff unless you're presented with either A, a copy of the permit, or B, this exemption certificate, because the state will hold you liable to do that. So, I'm sorry you guys missed out on that. So the rule book that I showed you, like I said, if anybody wants a copy of it, I can send them a PDF. I have it saved. It's not a problem. Now, a lot of people, when they sell stuff, they think, okay, I'm selling this to the state of Arkansas. I don't have to charge them tax. Or I'm selling it to the city of Fayetteville or the city of Jonesboro or the city of Little Rock. That is incorrect. Sales to churches, governmental divisions, and charities, even though they're a 501c3, are taxable. There are some specific exemptions in this rule book that right here, that GR 31 gives you all the specific organizations that are exempt. You can go look at them. It's kind of a lot. It goes from the American Red Cross to the Poets of the Round Table. I have no idea what organization that is or how much they would purchase, but these are all the organizations that are exempt as in GR 31. It would do you well to get a copy of this rule book. Like I said, even though it is 13 years old, going on 13 years old, it's the best way to go right now, so it'll give you a good basis. But a lot of people, think that the church is exempt from tax, and unfortunately it is not. They're exempt from charging sales tax, they're exempt from income tax, but they're not exempt from paying tax to their vendors. So if the church buys hymnals or anything along those lines, they're going to have to pay tax on it, and this is where a lot of people fall short. Back when I was auditing, everybody said, well, they're a charity. Oh, I'm sorry. Are they listed in this GR 31? Well, no. Okay, then they're taxable. And they will present themselves to you as being exempt. Oh, we're a tax exempt organization. So you've got to be very careful and go back and look at your law to see which organizations are in there. Now, you need to, if you haven't started your business yet and you're just in the process of getting it up and going, you need to register for sales and use tax. That's a pretty easy thing to do with the state of Arkansas. It's a one-form deal. I didn't put it up on the slide because it's 7 pages long, but for the most part, you don't have to fill out most of the pages. It's a combined registration form, so unless you're selling tobacco or firearms or motor fuel, you just fill out the first couple of pages and you'll get a sales and use tax permit. That'll give you your number that you can start working over and putting on the exemption certificate right here. Now, to report tax, the state's kind of gone to a process called ATAP, Arkansas Taxpayer Access Point. Most everybody reports on that. There's sales and use tax on that electronically, so you can file, set it up, and you don't have to worry about it. It's the best thing to go. It's one of the better things that they've come out with, but it is a little bit of a difficulty sometimes in getting on it and getting it established because you have to pay. Once you register, it says, what's the last amount you paid? Well, you've never paid on ATAP, so you have a little trouble. You have to call in at that point in time. Now, we kind of brushed against this a little while ago with Nexus. Nexus is a minimum connection to a state, and so it's a big buzzword now. When I said something about Amazon starting to charge tax, it came about because of South Dakota versus welfare. And you think, well, this doesn't affect me too much. I really don't care about Nexus all that much. Well, if you sell into other states, then you need to care. Most states have now adopted a threshold of either 200 sales or 100,000 in sales into a state for you to be registered. This is called economic nexus. Like I said, this was done because of South Dakota sued Wayfair because they were they were selling all kinds of stuff everywhere. No sales tax were being paid on it. It's easier to go after the vendor than it is each individual purchaser. And so South Dakota took them to court and went all the way up to the Supreme Court, and the Supreme Court created a new thing called economic nexus. Now, a lot of you guys are over in Northwest Arkansas. You're selling out of state, either into Oklahoma, Missouri. Over here, we sell into Missouri and Tennessee. Down south, it's Texas and Louisiana. If you go into any of these states to work and you're doing repair work or you're delivering stuff, you may be subject to Nexus anyway. That's something we probably would need to look at, and I would be happy to talk to you about it, because at that point I'm not, you don't necessarily have an economic nexus, but you've got a presence in that state because you're going in delivering via your own vehicle, or you're doing work in that state. So that presents another whole new can of worms for you. But if your business is really starting to grow, you need to brush up on the nexus opinions. Now, next up, we're going to talk a little bit about legal opinions. Legal opinions are binding opinions for the state of Arkansas. And these are what you write for. Be very specific in your legal opinions. We just did one for a local utility company on their new solar array. We laid it out for the company, and their entire solar array was going to be exempt from sales tax because they were a manufacturer. So that's, if you're going to do legal opinions, be very specific, because usually the last line of every legal opinion says this is based upon my understanding of the facts, or even themselves the way out. Now, once you get registered, you start reporting tax, you may get an audit. And that's not a good thing. Nobody really wants to be audited. It's going to happen sooner or later to you. So what we're going to start presenting to you right now is do's and don'ts for an audit. And this is usually a place where we get a lot of questions about, and that's fine. I don't mind having any questions about audits, but what you do is you have a auditor will contact you by letter. This letter will state, hey, we've selected your company based on an audit. Usually it's not a random. They like to try to tell you that it's random, but it's not. They've picked up a lead somewhere from another audit where they saw where you were selling items that you weren't taxing that you should have been, and that's kind of how it starts. And so you'll get this letter out of the blue saying, we need to talk to you about your sales and use tax. So once you get that, your best bet is to go to someone that knows sales tax. Now, your CPA may or may not know sales tax. Most of them are based on income tax, which is a pretty static tax. Not a whole lot changes. Sales tax changes quite often. I have a group of CPAs. I probably have about 20 firms across the state of Arkansas that send all their work to me for sales and use tax audits. I've got a couple over in Fayetteville that do, because they know I'm not a threat. I don't want their income tax business. I don't want any of that, but they don't want to spend the time to get to those sales and use tax because it's constantly changing. You have a legal decision come down, a hearing decision come down, a new legal opinion issued, and all of a sudden the law has changed a little bit, and it's not reflected in the book because, like I showed you earlier, it went out in 2008. So they don't want to take the time. They send it over to me. I'll work through the audit with the auditors. Now, the first thing you want to do when contacted by the state is get a hold of someone, whether it's another company, whether it's your CPA, whether it's us. You really want to get a hold of them because you don't want to just start talking to the auditors. Auditors love nothing more than to get you talking. And some people, out of nervous habit, start talking and talking and talking and talking. That never serves you well. So if you get them out of your office and get them into a area where they're contained, either at your accountant's office or somewhere else, never don't let them come on site and work. Send work somewhere else, and the information, the invoices, the purchases, whatever it is they're looking at, send it off site, because you don't want them, one, they're going to be running around in your business overhearing conversations between you and your employees, or between employees and employees, and that's never a good thing either, because things get taken out of context. We were always encouraged when we were auditors to get into the facility if all possible, because you see things at the facility that might not actually be reflected in all the records, and so you want to get them out of that, out of sight, out of mind. This will be, like I said, that'll allow the auditor to concentrate on the work, it allows you to concentrate on your work, and it allows the professional to handle your audit for you. Now, once you're contacted and you get a hold of your professional, they're probably going to ask for a waiver statute of limitations. This is never ever sign a waiver unless your records are in bad order or you can't get to them. The waiver, Arkansas law is based on a 36-month auditing period. It's a rolling time period, so as a month comes on the front end, a month goes off the back. If you were to get a sales and use tax audit today, they would be able to audit from December of 2020 back to January 2018. When February of this month rolls around, they lose January of 2018. February 2018 comes on and they can go to January of 2021. It's a rolling statute. You give them a waiver, 6 month, 9 month waiver. Well, you just locked in that audit period all the way back to January of 18. Whether they finish it up in a week, 2 weeks, 6 months, 9 months, however long you signed the waiver for, they can go all the way back. You want them in your office. You don't want them in your office, excuse me. You want them looking at your records and getting out of your hair. If you're doing something wrong, you want to know. You sign a waiver right now. You may not know you have problems for 6 or 9 months. Meanwhile, the problems go on. So never ever sign a waiver unless your records are just in bad shape. And they will also ask for a sample agreement. I've never seen a sample agreement work out to a taxpayer's advantage. Just 3 years ago, I had Steel Mill decide to sign a sample agreement against a better judgment, and it cost about twice what a normal audit was. Well, we worked through 5 different audits with them because steel mills are a direct pay. They pay tax no one, so the state audits them all the time. Their normal liability was around $100,000. With when they were in the random sample, their audit liability was $260,000. Every time I've seen a sample, it's never worked out for an auditor. I mean, for a company. Works out for the auditor because they have to look at a whole lot less. They'll either do a random stratified sample or they'll do a block sample and pick 1 month and extrapolate it out. But you want to stay away from random samples, stratified samples, any sample agreement. Once you sign that sample agreement, you're locked in. And your chance for getting refunds are locked into that sample period too, because if you've overpaid taxes on some of your other items, but they're not part of the sample, well, you're locked out from getting those as well. You want a full 100% audit every time. One, it takes them a long time to do it. Some months are falling off the back end. And 2, if you have problems, you definitely want to know. Now, that's the 2 major things that the state will try to hit you with. Once your audit is completed, you will have several opportunities to work with the auditor to get it. He'll give you a schedule. These items are taxable. And so you get to work off that schedule trying to get the audit down. This is the best chance you've got to get anything removed from an audit. It's with the auditor, the supervisor. And then once you appeal it, it'll go to Revenue Legal Counsel. Revenue Legal Counsel this is an attorney in the state of Arkansas that will handle your case. It will go before an administrative law judge. The administrative law judges used to be part of Revenue Legal Counsel. They were attorneys that promoted up. And so you're kind of at the mercy at that point in time. Once you get to that far to the administrative hearing position, chances of you winning much are slim to none. So once you get your schedule, it's time to start working with the auditor, working with their supervisor, and working with the attorneys. That's where everything's going to come from. But that's your kind of the progression. You get your audit, you work with the auditors, you work with the supervisor. If you still don't like it, you appeal it to administrative law judge here in Arkansas. You'll come out, hear your case. It's a very informal style. You'll just kind of sit around the table and talk about it. The state will have attorneys. Excuse me. You can have an attorney. You can have anybody present that you want. But they will be loaded for bear because they will have multiple attorneys on their side who know the law backwards and forwards. And most of them are pretty good to work with. There are a couple down there that are kind of naughties, but the rest of them are really nice folks to work with. But if you go to the administrative hearing, you still don't like your decision, you can appeal it to the Commissioner of Revenues. At this point in time, when you go to the Commissioner of Revenues, you just pretty much state what happened in the hearing. It is recorded. He'll listen to it. He has a lot of authority. He can make the entire audit go away if he wants. Or he can reverse part of it. Now, the bad thing about this is if you win something in the hearing and you appeal it to the commissioner, the state can also appeal it to the commissioner, and they can take away what you just won. So you want to be very careful. If you've won very much, you just may want to bite the bullet, accept it, and go on. Once you get to the Commissioner of Revenues, you still don't get a favorable decision. You get to go to you can go to court. You can take them to court. Arkansas used to be a pay-to-play state, so you had to pay the audit in full. Not anymore. You don't have to pay the audit in full. You can take it straight to court, and go from there. Now, realize that when you do all of this, interest is still running unless you pay the tax that the auditor says you owe. That's a bad thing because the state charges 10% interest per annum on all audits. The 10% interest per annum, that's money going. If they overpay you, I mean, if you've overpaid your tax, then they pay you back 10% interest. So it goes both ways. So if you pay your tax and pay it under protest and you win, you get all your tax back plus 10% interest. And that penalties are very rarely enforced, but sometimes they are if there's a good faith abuse, as I spoke of earlier, where you're buying everything exempt even though you're not using it. They will hit you for a penalty. If you've been audited multiple times for the same thing, they'll hit you for a negligence penalty that can range anywhere from a flat 10% to up to a 35% penalty. Penalties run 5% per month up to a 35% maximum. So anything over 7 months is a 35% from all the way back. Now, I know I've thrown a lot of information at you, and what we're wanting to do, I'm kind of want you to start thinking about your business. Maybe you're overpaying tax. Maybe you're underpaying tax. That could be a problem either way you go. And so you don't want to overpay because tax is usually, sales tax over here is at 8.5%. That's one of the cheapest rates going right around now. You get down to South Arkansas, you get 11 and 12%. You start kicking in 11, 12% on items that you don't have to pay tax on, it hurts your bottom line. Or if you've exempted sales to a customer of yours that you shouldn't have, you get to pay that 11, 12%, whatever it will be, whatever your local tax is. You are held as liable for the tax. Now, I know a lot of this, I've thrown a lot at you real quick. Like I said, it's a dry subject. It's not real sexy, but it's one that can ruin your business quickly because we make one mistake on a major customer. We have a electrician that from Little Rock contacted us, was in the middle of an audit, not much we could do once the audit started. They made a mistake in interpretation and they got caught for about $2 million. We're in the process of working that down. But sometimes once you get in and you get too deep, it's a snowball effect. You start exempting this customer and this customer keeps buying and keeps buying and keeps buying. And all of a sudden the state comes after you for money and you may or may not get it back from the customer, but you're going to have to pay all the tax. You're going to have to pay the penalty and you're going to have to pay the interest for your mistake. And so you want to get it right on the front end. So what we want to do is develop you a good base with that definition of the gross receipts that everything is taxable. If it's on the invoice and the item is taxable, remember, tangible personal property is taxable unless it's specifically exempted in the rulebook. So anything on that item that's taxable and on that invoice, you better charge tax on it or the state's going to come after you. So you start with that base, you know what your consumer use tax is, and then this exemption certificate can be your friend. It can exempt you from paying tax where you shouldn't. It will get your vendors exempted. If they're exempting their sales, it protects you, and that's what we want to do. Do remember though, the biggest mess up area, believe it or not, is sales to organizations such as the government, governmental divisions, charities, churches. Most people just think those are exempt organizations, and they are not. And so you have to be very careful when dealing with them. I know you don't want to hurt their feelings, and they'll say, well, so-and-so down the road is exempting these sales, and if you don't, we'll take our business elsewhere. Well, you probably won't take the business elsewhere because you're going to end up paying for it. And so you've not lost all that much. But that's what you've got to do. You've got to report every month. Once you get registered, you've got to report every month. Once you get onto the state's database and you don't start reporting tax, they'll come after you. You'll hit the business closure list. That is a list that is on the web, shows all businesses that have not paid tax in a certain time period. And sometimes they'll come close you down and put a big pink sign in your door or a big yellow sign that says business closed for non-payment of taxes. That's a little embarrassing. It's a little embarrassing too because your name is on this list and everybody in the world can see it. On the DFA website under forms, if you go to business closure, it'll give you everybody in your area it'll break it down by county. You can go look at it. You want to stay off this list because your competitors will use it. The one thing about sales tax is, remember, when in doubt, tax it. Because you can't go wrong there. As a retailer, you cannot go wrong. You make your customer present an exemption certificate to you, a completed exemption certificate, or a copy of their permit. And, if they won't, it's up to you to decide if you want to back the tax back out and make it come back up to what it originally was, or if you want to tax the whole thing, or if you want to tell them to hit the road. But that is your biggest thing. That'll be, as long as you're charging tax and you're reporting the tax to the state and sending it to the state, you are golden. And they will stay off your back. Once you get on their mailing list, it's hard to get off. Notices come fast and furious, especially if you don't report for 3 months in a 24-month period. That's when you become part of the business closure, and letters come to you once a month saying, oh, wait a minute, you hit 3 months of 24. If you don't report this month, we're coming after you. And you get that every month till you get past the 24-month problem. So collect the tax, remit the tax, and everything will be pretty good. Get your exemption certificates. Learn your rules, because there are special exemptions in there for special businesses. I cannot cover what everybody, what all is exempt or what all is taxable, because it's not the same for every business. If you have any specific questions, you can email me. Right here is my website, and you can see where it says contact. That comes straight to me. It goes to no one else in my organization. It comes straight to me. I will answer your questions. For the most part, I can probably answer them off the top of my head. If not, I can do a little research and get the answer to you. I don't mind answering questions. It's all good. And like I said, it's confidential. I know some of this stuff is personal, and some of you probably don't want to get out in front and ask questions, but if anybody has any questions right now, Caleb, we can go from there, and if not, they can contact me straight on.
Absolutely, we appreciate that. Just to let everybody know, I'll also be sending an email with this video link, the slides, and the resources you mentioned, in a follow-up email, and I will copy Jeff on that email too if you want to reach out to him. I will open the floor now for questions. So if you have a specific question for Jeff, you can drop it in the chat box in the corner, and I'll read it, or you are welcome to unmute yourself and ask a question out loud.
Let me tell you this. If you email me and want a copy of that regulation I showed earlier, that is, I'll send it out to you. It's not a problem. I do not share marketing. I don't send out marketing emails, because, oh my Lord, the only thing worse than sales tax is getting marketing emails about sales tax. Everything we do is confidential, so I will send you what you need, get your answer. I don't sell it. I don't do anything. We are starting and this is one thing that I did not mention, so it may be something somebody else may be interested in later on down the line. I'm starting an Arkansas Sales and Use Tax School with an attorney in Little Rock. He's probably the preeminent sales and use tax attorney in the state of Arkansas with Dover, Dixon, and Horn. We will be doing seminars quarterly. We'll be moving across the state. These will be continuing ed. You will get continuing ed hours for these. Attorneys will get their CPE for this, CPL, and so that's something that you can do. That will be a charge for that, but that is something. We have a beginner class, and then we have an advanced class. They're on back-to-back days, so you can pick up a couple of classes. But we will be moving from Northwest Arkansas to Central Arkansas to Northeast down to South. But I will, like I said, I will answer any questions, and we're not even putting any contacts we get from this. These will not go out marketing emails for the new class whatsoever. So everything you do will be nice and quiet, and we will leave you alone and not sell any information and not hit you up all the time.
Hello, may I ask my question?
Absolutely.
Yeah, my name is Sarah, and I have an online jewelry business. I'm very new to taxes, I was trying to do it online since I was doing it for 1 year on paper. It was very complicated for me, and I would keep getting this closure, as you said, what are the letters?
Yes.
The only thing for now I want to know is that how much taxes I need to charge when I'm selling something over internet, and I live in Benton. Well,
that's a great question. If you're living in Benton, the state of Arkansas used to be a sales state. So anything that you sold for Benton would be your local tax. But when we went to streamline sales tax, they made, we're now a destination state. So anywhere that you sell in Arkansas, you have to charge that local tax. So if you ship it to me over here in Jonesboro, I buy something, you better charge me Jonesboro and Craighead County tax. If it goes to Little Rock, you better charge Little Rock and Pulaski County tax. We are now a destination-based state, so you have to charge the local tax of where it lands. Now, are you shipping a lot across state lines, or is everything in state?
No, mostly in the state, but I go to different events and festivals
Okay.
in Arkansas. And they used to give me a paper, like paperwork after the festival, and then I will just send my taxes that way.
Yes. Well, yeah. Now, if your festival's in a different town, of course, wherever your festival is, that's the local tax you'll need to place. But the festival, you have a marketplace facilitator. That's kind of what the Wayfair law is all about. So that's why they're giving you that. A lot of times they will collect your sales tax for you and remit it because they're the ones actually responsible. If you have your own sales and use tax permit, you can say, no, I'm remitting it myself, but then you're going to start reporting all these other local jurisdictions. Unfortunately, there are almost 330 local sales and use tax jurisdictions. Every city almost has one, every county, but 2 has local tax. So if you're selling across the internet and wherever it lands, that's a tax you need to pay.
That is true. That's very. But I have one more question. I paid my taxes online for 2 months.
Yes, ma'am.
And then I got, yes, I mean, because I have an EIN number and I'm a vendor, so I've registered. And I received this letter that I owe taxes to Saline County that I have to pay. In my mind, the way that I paid it, it was, like I paid everything because that was the whole month for me.
Okay.
Can you explain to me what did I did wrong?
I cannot without really seeing it. I don't know what went wrong. I think Saline County just came up with the local tax option not too long ago, so that may have been what happened. You may have been just reporting straight city and county, straight city and state tax. I think Saline County might have come on in the middle of 2020 or so that might have been what happened. I really don't know. If you want to kind of send me that information, I'll look at it real quick and let you know what happened. But without looking at it, I can't give you a good answer.
Thank you so much. I really appreciate
And
it.
there's no charge for me taking a look at that. So you just okay?
I really appreciate it. Thank you so much.
No problem.
Any more questions?
I have a question, if you don't mind.
Okay.
On the local tax, like we have a hamburger tax, here in Conway. So like on a delivery fee that I charge my customer, do I charge that the state tax and that local tax on that?
You'll charge the city tax, the county tax, and the tax on the delivery fee. Depends on how your A&P tax is written, or hamburger tax, whatever you want to call it.
Yeah.
They may or may not have piggyback off the gross receipts title. And so that may or may, you would have to look at that resolution that they wrote up to pass that tax, see if it's attributable strictly to just the food, or if it's all encompassing like the Arkansas gross receipts tax is.
Okay, thank you.
You're welcome.
Any more questions?
Hey, Jeff.
Yes? Oh, you just muted.
Joyce, you're muted.
Okay, sorry. The one thing I was going to ask, because you and I had talked about this, just so that they know this and I didn't misunderstand it. If somebody, because I get this when I'm talking to people about you, somebody will say, well, I just got audited and everything looked great. Everything was fine. That doesn't necessarily mean that everything was great and they didn't overpay, right?
That is correct. Well, if you don't know much, that probably means you're overpaying tax tremendously, especially if you're a manufacturer of that kind. We just worked with a manufacturer down in Stuttgart that had a $22,000 audit. The refunds for the same time period were a little over $500,000. So don't believe just because you don't have a big audit liability that you may not be overpaying the other way. A lot of people would rather way overpay than underpay. And so that just because the audit comes out fine doesn't mean that you may be doing it all right. It may be you're leaving a lot of money on the table. So you are correct in that.
Any more questions? And you're welcome to, if you don't want to say your question out loud, you're welcome to drop it in the chat box and we'll read it.
You can drop in the chat box, or you can contact me directly, or however you want to do it. I know a lot of this stuff is kind of personal, so you may not want it out there, and we keep everything quiet.
Well, if we don't have any more questions, we will, I guess we'll wrap up. Jeff, we really appreciate your time today for this presentation. We appreciate everybody for participating in this presentation, for your questions, for your attendance. We will, like I said, we've recorded this. I'll send out a link to everybody who registered to the video. I'll also send out all the slides, resources, and Jeff's contact information, so that if you want some, if you have a question for him, you'd like to follow up, you can reach out to him. So I guess that's a wrap. Everybody have a great day.
Appreciate it.
Thank you.